Hello, I'm Max Keiser. This is the Keiser Report. Let's get right into it.
Right. Well, Max, you know what? Jamie Dimon has no intrinsic value.
What?
That's a response to his tweet here. Jamie Dimon, Bitcoin has no intrinsic value. Bitcoin says, cry harder, Jamie Dimon. But of course, Max, there is no such thing as intrinsic value. All value is subjective and derives from human consciousness, would say Carl Menga.
Right. The fact that Bitcoin has no intrinsic value or utility value is one of its greatest attributes, one of its greatest features. Why is that? Because anytime like a commodity would have some intrinsic value, let's say with silver or some of the electronics applications used for gold, that means that part of the community brings in what they believe to be its value, industrial value, and that would have an impact on the overall price discovery. And that would mean that it's not perfect money because some of those participating in that market have different expectations about its use case than those who are looking at it for the purpose of storing wealth. With Bitcoin, because it has no utility value and no intrinsic value, it's perfect money. Its only use is as a monetary premium is 100% versus gold, which is maybe 85%, silver, maybe 45%, cowrie shells, close to zero. U.S. dollar, zero. The U.S. dollar has no monetary premium whatsoever. It's literally worthless. So Jamie Dimon is a guy who's a bureaucrat. He's a button pusher. He's a bean counter. He's from the back office of the banking industry. He has no creativity. He's never sold anything in his life. He's a complete idiot.
Well, of course, the U.S. dollar, as Paul Krugman pointed out, is backed by men with guns, and violence does have some power, which is value. So certainly they do have a monopoly on force around the world that they could apply almost anywhere on Earth without any sort of consequence. So there is that. But in terms of what Jamie Dimon said, here was an interesting response from Gabor Gerbax, who's with VanEck, the ETF fund. He said the monetary value, though, looks over $1 trillion. Exactly what you're saying. So, okay, there's no intrinsic value, but there's monetary value, which is $1 trillion market cap.
Right. Because it's perfect money and that it has no utility value or intrinsic value to interfere with price discovery, it's demonetizing gold, silver, and the dollar. That's why people are selling their gold to buy Bitcoin, because gold is less perfect in terms of being a perfect store of value than Bitcoin. And so it's being demonetized. And that's what we're seeing happening, and the numbers speak for themselves.
So in terms of having no intrinsic value, let's look at the definition of spoof, okay? A spoof can be either a noun or a verb. I'll read both of them. In this context, what we're going to talk about is actually we're using it as a verb, but I'll read you what Google throws up in terms of define spoof. Noun, a humorous imitation of something. Typically a film or a particular genre of film in which its characteristics, features are exaggerated for comic effect. 2, a trick played on someone as a joke. So here we turn to the verb. 1, imitate something while exaggerating its characteristic features for comic effect. 2, hoax or trick. So hoax, trick, imitate. It's a trick or an imitation, a hoax. So Jamie Dimon, he says he knows about no intrinsic value. Well, let's look at this headline. JP Morgan settles spoofing lawsuit with $60 million payment. Yes, spoofing lawsuit. Well, the firm was engaged since 2008 to 2016 in spoofing precious metals markets. Reuters have reported that JP Morgan Chase & Company has agreed to pay $60 million to settle class action litigation by investors who accused the largest U.S. bank of manipulating prices of precious metals futures and options. U.S. government investigations into a form of illegal trading in precious metals and U.S. Treasury markets known as spoofing. Note they also mentioned U.S. Treasury markets. So they were spoofing U.S. Treasury markets. Spoofing is where traders place orders they intend to cancel, hoping to move prices to benefit their market positions. For example, a trader could put a massive bid in to buy gold underneath the current price in the hope that other traders will see it and start buying. This could push the price higher when the original bid was never meant to be filled. All the while, the traders could be holding the commodity, watching the price rise.
We've been talking about this for those entire 8 years. We reported on it. The Gold Antitrust Action Committee was reporting on it in the early 2000s. We've made films about it. We've talked to experts about it. Jamie Dimon and JP Morgan having been engaged in massive market manipulation and fraud in the precious metals markets and in the treasury market for a long, long time, many, many years. And let's be clear that when you're spoofing a market, you're committing a fraud. And there's no two ways about it. Now, the great thing about Jamie Dimon, and they perfected the art of keeping 90 cents of every dollar he steals. So that $60 million is a very small fraction of the money that they made by committing spoofing fraud. If Jamie Dimon was not committing fraud, his bank, JP Morgan, would have gone bankrupt many years ago due to his reckless bets and the losses that they took. And without the bailouts from the taxpayers, he would have been bankrupt 3 times over already. So, and he's not the only one. Warren Buffett, the guy at Wells Fargo, the Bank of America, Goldman Sachs, they're all in on doing the exact same thing, slight tweaking, slight variations. Remember, I've always said, remove fraud from American business, and you have absolutely nothing left over except a few teepees and buffalo. That's the only thing that's ever had any value in this continent are the indigenous people. Everything post Plymouth Rock is turned into complete garbage.
Right. Well, actually, the article points out that these litigants received less than 10% of what they had claimed in losses. So you are right on that. It does mention that they've paid, JP Morgan, the bank itself, has paid hundreds of millions over the past year in terms of fines to the Department of Justice for the spoofing. They, however, did not have to admit to any wrongdoing. They just sent this money like benevolently to the government.
The banks are self-regulated. That means they write their own regulations. And in the regulations that Jamie writes, it says that if anyone catches a spoofing, we pay a small fine. I get to keep 90% or more of the profits, and I don't have to talk about it in public or anything like that. And my daughter, who buys Bitcoin, she won't be embarrassed that her dad is a serial recidivist crook because I'm Jamie Dimon and I love to eat tapeworms because I'm a tapeworm and I crawl into the anal cavities of your society and I steal all your money and I'm a genius. He's that guy. Man, if there was any justice in this country, boy, he'd be, oh boy.
So, spoof, the definition, as I read to you before, it is a humorous imitation of something. So I think, one could laugh or one could cry at the imitation of free markets, of capitalism, of democracy. And maybe they're laughing. They are certainly laughing all the way to the bank. They're making a lot of money doing this. But in terms of this intrinsic value, there's no intrinsic value in anything. We're going to look at the real yield over in Germany, because there is no intrinsic value in any of those bonds there, right? Like they're negative yielding bonds and negative real rates. So good morning from Germany, where the financial repression intensifies. Real yields, 10-year Bunds inflation plunged to negative 5.52%, a fresh all-time low after inflation jumped to 5.2% in November from 4.5% in October. Real yields now negative for 67 consecutive months. Another historical record. That's what it looks like in a chart. Woo, plunging, negative real yields. That's taken 5.52% from your wealth, your pile of wealth.
That's right. So your savings are being subtracted by over 5% to feed the bankers who steal that money. It's a form of theft. It's a kleptocracy, and they buy a yacht and they hang out in Monaco with your money. And the solution would be to purge the system of these guys by raising rates. And you would take something to induce vomiting, because you need to get it out of your system. If you need to vomit out these bankers that are putting the negative yields down to these levels, but nobody has the courage for that.
Well, so this is the ECB buying, this is the Fed buying, these are the central banks buying regardless and pushing down these rates in order to cause this so-called repression. I think one day, instead of calling it financial repression, they'll call it financial emancipation. In a way, I believe it is. You could look at it negative or you could look at it positive. And I think in a way, like, we're Bitcoiners. I don't care really about the system. Where, you know, our job and our role out there is to educate as many people worldwide to tell you what's coming and what's happening. We're looking at their own data. This is what their own data is telling you. You can choose. Some people pay good money to get whipped like that. And, you know, if they want to be financially repressed, some people might like it. But I think a lot of people don't, and this is why we cover Bitcoin. This is why we cover hyper-Bitcoinization, which is an exit plan, an opt-out to this system. So you could either endure this, you could either endure and like it, you can either endure and cry and whine and complain, or you could just, like, literally step away. That's all it takes. It's easy right now.
Yeah, don't get me wrong. When I talk about the horror of this, I'm channeling the anger of the audience. This doesn't apply to me. I've been buying Bitcoin for 10 years since it was $1. I'm profiting from their skullduggery. Thank you very much. But I know you out there who don't own Bitcoin are in a lot of pain. So I'm channeling your anger and pain to let you know that it's okay. Just buy Bitcoin.
In terms of this, like the pig-headedness, the wrong-headedness, Jamie Dimon, Bitcoin has no intrinsic value. Then we're seeing a lot of fiat apologists and fiat bugs who will say, you know, it's immoral to have Bitcoin. It's immoral to have a money that does not decline in value. So, you know, I'm thinking, like, when you look at this, the built-in obsolescence of our system is, in their own minds, needs to get faster and faster. Like, so the value of your bonds, they should disintegrate faster and faster because that's the only moral thing to do in their universe.
That's like the argument undertakers make against people dropping dead. It's in their interest that people drop dead. It's in their interest for some financial pundits to see the value of the currency lose value because they can gain traction on social media saying it's somehow a good thing. But not everybody is an undertaker. Not everyone is a grave robber. You know, some people are actually out there trying to be productive and lead productive lives. And of course, that philosophy of, oh, the currency is going to zero and less than zero, and that's a good thing, is a madman. It's a lunacy. But that's what they get paid to do. All righty, we're going to take a break. And when we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn back to our conversation with Simon Dixon of Bank to the Future. Wrote the book, Bank to the Future, first mention of Bitcoin in a published book. Once again, thank you, Simon.
Always good to be here. Thanks, Max.
Let's discuss predictions for 2022 and beyond, as well as your assessment of the year that has just ended. Now, let's start with that. What were the 2 or 3 biggest economic, monetary, or financial stories of 2021 in your mind?
Well, of course, it's got to be the El Salvador making Bitcoin legal tender. And of course, it's got to be the announcement of the Bitcoin volcano bond, because these lead to, as we discussed in the previous episode, the reinvention of not just money, not just debt capital markets, but also equity capital markets and securities in general, which are ginormous markets. And to be able to see those, built upon digital hard sound money is really the next phase of Bitcoin adoption and the reinvention of the financial markets. What could be more important than that?
El Salvador making Bitcoin legal tender. You know, before that what happened, there was a guessing game who might be the country to make Bitcoin legal tender. Nobody had El Salvador on their bingo card, as I recall. Who do you think might be now the next? I'm hearing Tonga could be the next. There are, of course, 160 or so countries around the world. Any one of them could be next. Any thoughts on that?
You know, the order of events is it could really be anyone. It could be in Iceland. It could be anyone that's in a situation where they want to transform their personal sovereign debt. Those that may have a large dependency upon the dollar, but not the ability to create the dollar, which is many countries are plagued by that challenge. It's it's a chain of events where at the very top of the chain you've got the ones that have the most to lose, which would be the Federal Reserve, going down to the European Central Bank, going back to Japan, and then at the very bottom you have countries that really have no sophisticated financial markets, no sophisticated central banking, and maybe are dependent upon another currency other than one that they create, or they're going through some kind of hyperinflationary event. The fact that these countries get another shot, it means that there's many countries in that situation right now. So there are many countries that are experiencing the incredibly destructive effects of destroying their currency. And so they might say, well, we don't want to be at the mercy of the monetary policy of the Fed, and we don't trust ourselves. So what's the logical next step? Well, you can return to a gold standard, but, or you can just use a Bitcoin standard. To borrow a phrase from Saifedean Ammous, to be able to build it upon digital hard sound money is an opportunity for every country. And the earlier the country decides, most people will be watching El Salvador right now. They'll see how it works out for them. And then they'll be deciding that the earlier we get on board to this, the more the opportunity to have the bigger effect in terms of wiping out sovereign debts and moving to a monetary policy where there is no central bankers, nobody that can interfere in the monetary policy.
These volcano bonds, designed primarily by Samson Mao over there at Blockstream, that El Salvador is going to be floating. It's a 10-year bond. The Bitcoin is half the bond, or $500 million, with a 5-year lockup. As Samson tells it, that's $500 million Bitcoin that's off the market for 5 years. El Salvador could do a follow-up, certainly with this bond, and do several billion more. Other countries could follow suit. So the supply-demand equation for Bitcoin gets very compelling, Simon, with these demand shocks. If 10 countries suddenly follow suit, there's going to be very little Bitcoin around at these low prices, Simon.
Yeah, and this is just really the next phase of, so many people don't get into Bitcoin because they have these perceptions of these attacks. And, some of them are the government ban. Well, in 2021, the government ban became, we got the example of what happens when a country bans and when a country doesn't ban. So in the United States, they decided that they would, the SEC would support a Bitcoin futures back exchange traded fund. And now the most sophisticated pensions will have some Bitcoin through the ETF within their pension fund. Now, you will also, they had the infrastructure bill, of course, they want their cut. So if you can't beat it, why not try and get some tax? And so you had that happening in the United States. And then in the same time in China, China said, we're going to ban Bitcoin mining. And what happened to Bitcoin? It had a correction and went up to all-time highs. Just like last time, they said that they're going to ban Bitcoin. And then they have a consultation around, have we been a little bit hasty here? Is Bitcoin a tool that we're going to need in the upcoming currency wars as we enter these geopolitical currency wars and debates? And so a lot of the mining went to Texas, and America was the beneficiary to that. So these government bans really punish those that make these bans. And there's always another country that says, well, we'll one up that. If the United States is getting a bit of the industry, we'll just make Bitcoin legal tender, and we'll just create bonds backed by it, and we'll take it to the next level. And so really these currency wars that Jim Rickards has always talked about, Bitcoin has become a major player in that. It was always thought that gold would be the player in that game, but the returns that have been achieved through speculative stores of value like Bitcoin are opportunities for every country to have bigger impact, and not just have this store of value that doesn't really increase the wealth, but also one that tends to, because of the economics, increase wealth like we've seen in Bitcoin.
People get scared off by the volatility. People get scared off by the government bans. But this is the way Bitcoin is designed. It's a bit of an astringent. It pulls out the poison, and it pulls out the bad actors. and reveals them for who they really are. A Rubini or a Schiff are overrated blowhards. They really deserve not to have a reputation at all. Money managers who have not invested are underperforming dramatically. Pundits like Paul Krugman at the New York Times exposed as a warmonger and a slime bag. And that's what Bitcoin can do. It reveals the truth. Now, talking about slime bags and posers, in the past weeks, Joe Biden said that Bitcoin makes it difficult for the U.S. to impose sanctions on other countries. Hillary Clinton said that Bitcoin undermines the U.S. dollar. So who's zooming who here, Simon? Is Bitcoin revealing these slime bags for who they are, or do they have a point?
Well, they're doing their jobs. Firstly, of course, they have a point, and their job was to, their job by definition is to maintain their power and influence over the world through the dollar. That is their job. And the minute that the Federal Reserve starts buying some Bitcoin, which is why they'll be the very last person to buy Bitcoin, it undermines the goals of that. It's why when Trump was in power, he was negative towards Bitcoin because his job is to defend the dollar. That's the president's job. And so you'd expect this. As soon as he's no longer president and he goes through a financial blockade and censorship, he truly understands the benefit of money you can own, money you can spend, and money that has a fixed supply. So it's just people looking out for their self-interest and doing their mandates and doing what they're meant to be doing. So I don't think we should be surprised by these things. But the reality is that what we've seen is that Bitcoin at the stage that it is whenever you get these attacks, whenever you get these, what's the next one? So people might be fearful of the 1 million Satoshi coins hitting the market. Well, there's now countries and sovereigns and organizations that could suck up that supply. And so what would happen is you'd get the ginormous correction in Bitcoin that we've seen before, and then you'd immediately get the buying power of people that knows that there's only 21 million of them. So what? Another million have hit the market. This is money you can spend, money that you can own, and money that has a fixed supply. And so therefore you just go through the inevitable cycle that we've seen over the last decade, which is first you try and laugh at it, and then you think it's, then you realize that it's something to be taken seriously. Then you try and eliminate, and you realize how futile that is. And then Bitcoin corrects itself. The whales come along and accumulate more Bitcoin, and it rewards the people that were able to accumulate that and had a longer term horizon. Remember, this is wealth effect. This isn't fiat debt-based Ponzi schemes where your goal is to take on more debt because the value of your fiat is going to be worth less in the future. This is create a wealth effect whereby it rewards the saver because of his fixed supply and economics. And then once you have a wealth effect, you can redistribute, you can collateralize, you can borrow money that goes down like the dollar, and you can really reinvest that wealth. So this is Austrian economics that is happening outside the financial system. And every time someone interferes, it just creates corrections, it creates manipulation, it creates volatility, and that the long-term fundamentals prevail.
Bitcoin has come back from death 3 times. I think Jesus only did that once. Give you an idea of the power of Bitcoin. Now, somebody made the statement that going forward, the world reserve asset will be Bitcoin. World reserve currency will be the US dollar. Do you agree?
Well, I think that there's 2 use cases that are going to emerge. There is money that you want to spend and you use for your expenditure, and there is money that you want to save. And so the wise thing to do is put your money, put your savings in money that you want to save. And therefore you look at the economics of that. And for expenditure, you look at money that you don't want to save, the money that you want to spend. It's a simple Gresham's law. So money that you want to spend will be central bank digital currencies as a deleveraging effect when the systemic banks risks and all the debt. I think the governments are going to deleverage and use central bank digital currency to replace the money that disappears every time a bank goes bust or hits some systemic risk event, so that people then don't lose their money. And then Bitcoin becomes the place where people want to save, which is money that tends to go up in value because of its economics over the long term. And so I think you end up in the end you have a central bank digital currency-led model, which is money that you want to use for your expenditure. However, they need to keep the user experience of that money good. So one of the biggest risks with central bank digital currencies is that they use it as artificial intelligence-led surveillance and control, where they automate tax collection, where they put negative interest rates algorithmically based upon the environment, and they connect it with fiscal and modern monetary theory, where the politics is combined with money. That's the future of central bank digital currencies. The very opposite is true with Bitcoin, and you have the two competing, and then Bitcoin becomes the regulator of the regulator, as it were, which is the regulator of fiat currencies, because if you get too bad with the user experience of these central bank digital currencies, then you're competing with Bitcoin, and we get into this really interesting communist versus free market debate on the currency war level that I think is going to be one of the most interesting and exciting times to watch and view in financial history. And we all get to see it in real time and documented from the beginning on the Keiser Report.
Great point. Fiat money equals communism. Couldn't agree more. Simon Dixon, thanks so much for being once again on Keiser Report.
Thanks for having me.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. Want to thank our guest, Simon Dixon of Bank to the Future. Until next time, bye, y'all.